Hey guys, Mike here. So another interesting day in the market with a ton of economic news coming out. We're going to go into that. We're also going to go into a lot of data on the real estate market and show you how great it is performing, as well as another market is just on hot fire right now. I mean, it is just roaring like crazy. And I don't know if you pay attention to charts or you just watch these videos and let me, kind of keep you up to date on this. But to me, let me know in the comments what you think. And maybe I'm wrong on a couple of things here, but I'm just going to put it out there. It's obvious what's happening right now. Okay, I don't care what data is coming out, which you'll get to see what I'm talking about. I mean, just look at what's happening. You may be unaware of this, and most people would just because of all the volatility we've had. But I said right here to the members, I said, what's crazy right now is we are actually green for the Santa Claus rally at this point in time. This is the last day, and which is shocking. So I can't imagine, as long as we don't go below, I think it's 380, we're going to be green for a Santa Claus rally. Don't matter how much green it is. It wasn't a drop, right? And so there's no percentage I've ever found saying it has to be 3% to be a Santa Claus rally. But they're just keeping us right here, right? In this zone, in this chop fest, no matter what is happening. And there's a couple reasons that. One, if you have a negative, a red, well, no Santa Claus rally, but you get coal instead, the stats, even psychologically, are just horrific for the next year, right? And so that's why it happens a lot. And so it doesn't surprise me on lower volume today, all of a sudden it's pushing us up in green. It feels like we're down 10% in the last 7 trading days, the way the volatility's been, right? But no, we're just sitting there in that little chop box, just barely moving. And the other reason is, in my mind, is this right here. Because guess what's right around the corner? You got earnings. And so why sell us off when right around the corner starting next week, we're right here, right there, and you're going to sit here and have a bunch of them reporting like KB Homes is Wednesday. People are going to hear about that in the housing market, and then the big one starts off. These are the financials: Citi, Wells Fargo, BlackRock. You come in next week, look at all the earnings coming across the board, guys. Got Netflix coming up, a little tech for you. What do you got the next week after that? Oh, is that Tesla over there? Sure is. You can imagine how many people are going to listen to that one. And so you got to think about how, and obviously there's no doubt the market's being manipulated because. And they're holding us here for that, in my opinion, because look at the data. We sit and had all the data came out yesterday. It'll push us down, and what happens? They push us right back up. They rally us right back up. Today, JOLTS job report, 10 a.m. Boom. Still 10.5 million jobs out there. Didn't change from October or November. Didn't change. Market sold off immediately. Said, oh my God, this is terrible. And what happened? It rallied right back. And then you had, what was this right here? The ISM manufacturing. Shocker, still in contraction phase, shrinking, going down. The other thing was the employment index returned to expansion, though. It actually increased. That's really what the Fed wants to see, right? And so all this stuff comes out, the market goes negative, boom, they bring us right back. Don't worry about it. We got this. Here comes the FOMC minutes. Oh my God, they're so bullish. No. Every single official in those minutes, they've already said this multiple times, none of them, not even one, sees a rate cut in 2023. 17 of the 19 members believe that the rates, the Fed fund rate, should be at least 5.1%, if not higher. Okay? That is shocking, including in September. You don't have any of them going that high. Okay? And with this job data coming out, you saw it yesterday come out, there's no way. Why in the world will they start cutting rates? Now, will they pause at some point in time? Yeah, there's no doubt that they're going to do smaller rate increases. Yes, you can't do 75 basis points every freaking meeting, right? And so, but the market is just holding us there. Doesn't matter. Doesn't matter. Here we are. We're going to sell you off, come bring you back. Sell you off, bring you back. But we're going to make sure we stay in this window to where if there's a bunch of puts over here, we never go that far. And if there's a bunch of calls, they never go that far. I'm actually putting a members video out today. They'll actually have seen this by the time this video comes out. Kind of showing this, and I'm playing around with this range I'm trying to come up with just to kind of let me see, okay, here's what the day should be, right? Here's what the upside, downside, however you want to calculate it. But this is, if I'm a market maker who's selling these, puts and calls to people, where do I not want the market to go? And I don't want to go here and here. And that's exactly what's been playing out, really, for most part, except on days where you get just the market actually does react crazy to news and drops 2 to 3% or something, or skyrockets 2 or 3%. Like on December 14th, the last FOMC meeting, right? That threw everything out of whack for a couple of days. But to me, that's what's happening. Let me know in the comments what you think. because there does come a point in time in a bear market where you just see it, where they just don't react to the news anymore. You saw this on earnings the last couple of quarters, where it had horrific earnings and just kind of like, it's all right, and they just stay in this range, right? And so it's interesting to watch it. Like I watch it every day, but the market is just killing it. And if you're in it, congrats to you. And that's just the Chinese market, man. Like, big money has moved into this thing, and I mean, they are roaring. And today is no exception. They are up huge. Look at this. You got JD up 15%, Baidu's up 10, Baba's up 13, Neo's up 11, XPeng is up 15%. And the real reason they gave, and we've heard all this before, but this is what they're saying, coming out of the government, I guess, is basically what they're going to start doing is, we already know about the pandemic stuff with all the testing and stuff. They're going to go away from that, but also the fact they're talking to Australia about letting coal imports in maybe, and also not cracking down on Jack Ma's financial tech behemoth, which of course, remember he disappeared for a while there. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And so it's up huge. And like they say, there's a bull market everywhere, and big money. If they ain't flowing into this market, they'll flow into that one. And I mean, I saw a stat yesterday. They're so desperate talking about tracking how many people ride on the subway in China, as far as see if it's bullish or not. And so, and another thing they're doing, the big thing is they're gonna, the property value. They got that huge bubble, right? It's probably the biggest bubble in the world. Well, guess what? They fixing to inflate that baby some more, right? And get those builders more money to keep going, to keep building houses that nobody wants and stuff like that, and keep pumping it up. And so that's the other big thing. People are like, yeah, all right. And so there you go. So if you're in it, congrats. If you're not, it is what it is, right? It's kind of how I look at it. And, speaking of housing market, now we're going to go with our housing market, okay? And I'll kind of bring you a real life event on this. And the data, as you know, is not that great, right? So for the first time in like a long time, it's actually cheaper to actually rent a single family home than to buy a starter home at this point in time. As you can see to the right there, if it's positive, that means it's actually cheaper to rent. If it's negative, then it's cheaper to actually own the home. And as you can see, it's never been this high before. And then we'll go through a few more here before we touch base on that again. But then you got months supply of homes. This is back in the 08 crash. This is where we're at now. Go down, pending home sales, you can see is in the gutter, right? I mean, who's out there trying to pay these prices? Even though the prices have come down in a lot of areas, for sure, but the rates are still through the roof, even though they come down some. And then we got U.S. existing home sales, seasonally adjusted annual rate, and you can see where we're at down here at this level. Hadn't been at that level since 2020 when we shut down the world, and you couldn't even, I believe, go out and buy a home at that point in time because nobody would take you to view them or be around you. And then going all the way back to November 2010. So definitely looking strong there. And lastly, you got the purchase applications index. And you can see there we're once again at a level we haven't been in since 2015 and 2011. And as you can hear, it's starting to rain, but I'm not going to stop because I'm almost done, okay? So as you can see, I know every market's not the same, but yes, I actually did go on Zillow, pull up 2 different homes and show people that yes, it is cheaper in a lot of markets now to actually rent. But the other thing is, think about this. What's keeping money in our bank accounts? What's keeping us able to pay the credit cards off? Because people aren't out there doing the big purchases. They're not out there buying these homes. They're not out there buying the expensive cars right now for multiple reasons. But one is the dang rates, trying to get the loans for them is unbelievable, right? And prices are still high, much higher than they were on homes and stuff. And so, that brings us to the savings. I mean, supposedly, this is the latest data I could find. You can see peak savings of 2.1 trillion, and now we still have about 0.9 trillion, but it's, it's down there. It's low, right? But another thing that's happening is, for the first time in a long time, is people are earning interest on their money. Whether they're putting it in bonds, whether they're putting it in CDs, whatever it's in, there's so many different options now where you can literally earn, 4 or 5% on the money when you're earning, what was it, like 0.25%? Remember that for years? 0.25% if you were unlucky, which is a joke. And so people are able to do that. So those people who are going to make those down payments on houses, if they're just parking that cash, it may not be a lot, but guess what? It's better than zero. They're making money on their money. They're compounding, as I teach my son, right? Most important theory to understand. But of course, what's also happening is you young folks out there going out there and you ain't paying your car loans off. Look at this right here. Look at 18 to 29. biggest pop in 90+ day delinquencies right there. And this is what we're waiting on. I'm waiting for the newest data to come out and stuff to show you guys on all loans. But, you know, it shouldn't be shocking because obviously young people are just getting started out, right? So they ain't been, you know, promoted 10 different times or gotten 2 or 3 different degrees to move up and everything. And so, and who likes really nice cars? Young folks, right? And so that's happening. So you see that's 90 days, not the 30. That's the 90. That's the big one. And so that's something to keep an eye on. But again, it's simple what's keeping us afloat, and it's just the big ticket items aren't being purchased the way they used to be. And so people have more money on top of that money, and now they're actually able to earn money on their money at a respectable rate, at least you could say, right? And, you know, we'll see what happens tomorrow. We got more data coming out. Will the market react? Sure, it'll go up or down 1% and probably come right back to us to stay in that range. But you can see right there on Thursday, ADP, non-farm employment changes, unemployment claims, right? And so that's something we got to look at right there. We also got Bullard from the Fed speaking, so who knows what the heck he's going to say. But there's no reason for the Fed to do anything different because the jobs aren't going away. The raises aren't going away. It just isn't, whether you like it or not. And if you're getting them, you know, congrats to you. That's the way it is. One thing that also is happening, though, to keep this market afloat, look what's going on around the world right now. Germany reported lower inflation, right? People were stunned. France reported, I believe this morning, lower inflation. Okay, and so that's starting to happen. And then with China doing their stuff, don't matter whether it's true or not, all they got to do is say it. And people are going to jump on it like a dog in heat. And that's just the way it is, right? And so that's where we're at. We'll see tomorrow. Again, do I expect any movement? We'll see if we can finally break out of this channel now that the Santa Claus rally thing is over. We're starting a new year and stuff like that. And so anyway, sorry for the noise and the rain, but that's what happens when you film in an outside room. So anyway, I hope you guys have a good one. If you got anything out of it, hit the like and subscribe button, and I'll see you tomorrow.